Well, welcome back to the hot seat. Today I'm joined by a long-term PCD supporter, Caroline Bennett-Akkaya from 1291 Group in Geneva. Good morning, Caroline. How are you?
Morning, David. Very well, thank you. Good to be here.
Well, great to have you on the hot seat. It'd be great for our audience to understand a little bit more about 1291 Group and specifically what you do in case they aren't familiar with your business.
Yeah, thanks, David. So 1291 was founded 20 years ago, actually, by Marc-Andre Soler, a lawyer in Zurich, and it's since expanded globally. Got a presence in 13 jurisdictions now, mainly in Asia, Hong Kong and Singapore. Got Liechtenstein, Dubai, recently opened in Geneva, and then we've got little representatives in LATAM and the UK as well. And basically, we're a group of professionals, lawyers, insurance specialists, tax planners, tax and estate planners, and the core of our planning is insurance. So it's insurance solutions, whether standalone or in combination with a trust company or foundation. I've joined the group in Geneva, 1291 Geneva, and we're licensed by FINMA to provide insurance consultancy services. So our clients are high net worth families from all over the world, and we've been helping them protect their assets and provide succession planning vehicles since 2000. So we basically focus on tax compliance solutions, which are going to last over many jurisdictions. We're licensed to provide services in over 30 countries. We have tax compliance solutions for over 40 client residences, and we work with over 20 insurance companies. So we're independent. We're able to actually choose the right solution for the client. And as I said, I joined in Geneva this year, and my role is to support our professional intermediaries and their clients with the wealth planning needs for the clients. 1291, we've basically over the years realised that clients have pretty similar needs that can be sort of crystallised in one an acronym called PATEC. PATEC. I'll tell you a bit about what each of those are. So the P is for privacy, because obviously the insurance policy is opened in the name of the insurance company, and the insurance company legally becomes the beneficial owner of the assets. A is for asset protection, because if the policy is correctly set up, then policyholder benefits from being outside of any seizure or bankruptcy proceedings. Obviously, fraudulent conveyancing rules apply, but if we're set up correctly, then asset protection is a big feature. T for tax optimization. With many of our life insurance policies, there's a legitimate tax deferral. So whatever goes into the policy is not, in certain circumstances, not going to be subject to capital gains tax or interest or dividends. So the compounding effect of holding assets within a life insurance policy is amazing over the years, because of the whole fact that there's not a chargeable event on switching shares in and out, for example. The E part is estate planning. So with as I've just explained, we can nominate the beneficiaries of the life insurance policy, but we can also use that very well in combination with trust if we want to make sure the assets are held over a long time for generations. And the C is for cash or liquidity, because the life insurance policies have a death benefit, usually quite a small death benefit, but we can actually increase that death benefit if the client knows that they want to have extra liquidity upon their death.
Terrific. Well, look, I mean, given your experience in the trust industry, I mean, how do you see the evolution of insurance solutions as part of client succession planning? I mean, we've seen more different jurisdictions introducing tax rules that make trusts and corporate structuring perhaps a little less effective, certain jurisdictions, certain asset classes. How do you see it, having worked in different parts of the industry?
Yeah, I mean, I have worked in the trust industry for a long time. It's probably 25 years now. So I think trusts really have a place for succession planning. Obviously, they're been around for centuries, and there's a lot of precedent. So for succession planning, I think trusts make a lot of sense for clients in jurisdictions where trusts are recognised, whether they live in a common law jurisdiction. But actually, I think insurance can have a role where you've got clients in civil law jurisdictions, particularly in Europe, where trusts aren't going to be recognised. So life insurance policies are a recognised planning tool around the world, especially in Europe. So solutions that we provide also are pretty portable. So you might have a client starting off living in France, and we might have a French life insurance solution for that person, and then they might move to another country in Europe, and in some cases we can actually that solution is portable. But as to whether trust versus insurance, actually I think it's not really sort of one or the other, and actually I think where it really makes a lot of sense is when you combine the two. So you might have a scenario where you've got a trust holding a life insurance policy underneath the trust. So yeah, I think one of the most sort of powerful combinations these days is actually a combination of trusts and life insurance together.
Okay, because that might help the trustees kind of manage tax liabilities and help the administration of the trust. So the two vehicles.
Yeah, I mean, you might have a scenario where you want to sort of put in place a plan for over many generations. I mean, obviously the trust does that, but with insurance policy, you might actually put a trust as a beneficiary, because the way that would work would be the policy. You've set up the policy. On the death of the insured person, the assets would go to the beneficiary. But actually, if these are minor beneficiaries, it might be better to have a trust as a beneficiary, and then the trustees can manage, not manage, but they can have the assets to look after for the benefit of those beneficiaries. So there's, yeah, as I said, I think there's a way to use trusts and life insurance as a great combination.
Do you think there's also a better sort of inherent understanding of insurance contracts, because everyone buys insurance, whereas the trust concept is notorious in countries where it's less commonly used, that it seems a little bit of a less familiar concept? Do you think that?
Yes, I think obviously because a life insurance policy, it's a contract, so the policy holder has the control, if you like. So they have the power to revoke the contract, to ask for partial surrenders, and they can appoint their asset manager. Obviously, with the trust, you've got the element of discretion, even if they take the beneficiary's wishes into account. But yeah, as you say, people understand insurance. I mean, the parties of the insurance, it's very easy to understand. You've got the policy holder, you have the insured person, and you have the beneficiaries. So everybody has their role. But we at 1291, it's very, I would say, we really bespoke these solutions. It's not a one size fits all. So we really are going to tailor make the solution, to add many multiple lives as insured persons, to keep the policy going as long as possible. Or where you've got cross jurisdictional beneficiaries, you might have beneficiaries in the US or the UK. In some circumstances, we can actually bespoke a policy so that it's dual compliant for US and UK. But again, we need to do that in the context of using professional advisors, tax advisors and lawyers, and we'll basically sit in the middle of the planning with the client, and then we'll use the expertise of the professional intermediaries to input especially on the legal and tax element.
Sure. I mean, in some of the cross-border estate planning webinars we've been doing recently, a few times people have talked about PPLI contracts, and they particularly ones we've done out for an Asian audience. I mean, perhaps you could explain the PPLI, private placement life assurance policy, briefly touch on it and the context.
Sure. So it's so private placement life insurance. It's a contract between the policyholder and the insurance company, whereby the bankable assets or non-bankables, actually, because you can put bankable assets into an insurance policy, but you can also in certain circumstances put the shares of a holding company. Anything that has a value on it can actually go into the policy. So those assets are held by an insurance company, and the insurance company will have a policy for each policyholder and their beneficiaries. You'll have insured persons on the policy, and on the death of the last insured person, there's a payout to the beneficiaries. And that's what I was talking before about trusts, is actually you can decide already how you would like your assets to be passed over, whether they would go straight to your children or other beneficiaries, or maybe use a trust to slot in to make sure the assets are looked after over many generations.
Okay, so it contains that investment component plus the life cover, which is enhanced and
exactly, yeah.
Okay, very interesting.
And in most cases for the solutions that we're talking about, there actually needs to be a discretionary mandate. I mean, I'm thinking particularly about the UK solution we have. We need to have a discretionary mandate so that the life insurance is not qualified as a personal portfolio bond, for example. So again, that's why we work with external asset managers to make sure all of our solutions are compliant.
Okay, and other types of contracts that come up in these discussions are universal life and variable life insurance. I mean, perhaps you explain a little bit more about how they work.
Yeah, sure. So PPLI, just to sort of put it a bit in context, is has quite a sort of small death benefit. So typically, what a 1% death benefit on top of the assets. That also can be bespoke, so we can put a higher death benefit on depending on the insurance company. But universal life, that is a concept that's very widely used in Asia and the US, and this is a very, very high death benefit. And that works whereby the insurance company will give a multiple of a premium. So depending on the age of the client, where they're resident, and their health, because there needs to be a medical exam, basically there's going to be a multiple of a premium. So that is very useful for clients who know that they're going to have a very high tax liability when they die. For example, if you've got property in the UK, there's going to be a 40% IHT hit when the person dies. So by kind of working backwards, we can anticipate what we think the IHT liability is going to be, so that the universal life provides this pocket of liquidity when the insured person dies. Again, that can be used very effectively with trusts. So trustees holding property might, although that's not so common these days with the tax changes, but again, using universal life can really provide this pocket of liquidity for clients who know that there's going to be a big tax charge when they die, and they don't want their children to have a fire sale of assets or sell a property, for example, to meet those IHT liabilities.
Okay, thank you. And I know you work with sophisticated families, ultra high net worth clients. I mean, in the family office space, what kind of services might you provide to those ultra high net worth families?
Yeah, so as well as insurance solutions for those clients, we can also help with management of special projects, actually, such as setting up a private fund, managing to buy property in a discreet way, financing aircraft, helicopter financing, sourcing special finance solutions for acquiring those kind of solutions. And then sometimes we also get called on for support for relocations. Again, we're going to be calling on lawyers to help with that, but we are, given our network, and our global presence, we can help clients with the coordination of those kind of services.
Okay, great. Thank you. I mean, we're coming to the end of this extraordinary year 2020. I mean, how's it been working? How's the sort of Swiss working environment been during this period? I mean, London, the city has been deserted. Many people still working from home until the spring. I mean, what's it been like working in Geneva through this period?
Well, funnily enough, I joined 1291 in June, and that was at the time when Switzerland was literally just coming out of lockdown, and we found it was actually a great opportunity, because people were coming back to the office. Not everybody was back to the office, but everybody was certainly very willing to have meetings again, and so we had a really great couple of months, reconnecting with people and telling people about 1291 and what we can do. So that actually worked out pretty well, and we've just come out of a second lockdown in November. But it's actually, I think kind of you'd have to make the best out of it, really. So we've done a lot of virtual meetings, we've joined webinars, we've joined networking events such as your PCD. But it's I think we probably haven't been so hard hit as London, and Switzerland sort of seems quite buoyant, I would say.
Excellent. Well, look, that's good to hear. We hope to be back in Geneva in June next year.
Yeah,
and look forward to seeing you soon. But thank you for talking to me today, Caroline, and we look forward to sharing this with our members.
Thank you.